India's financial markets are buzzing with activity, but are investors truly benefiting from its rapid evolution? Today, we delve into three critical stories shaping India's economic landscape. From banking collateral to global oil and domestic IPOs, Indian insurers are pushing banks to accept government bonds as collateral for derivative trades, moving away from cash. This request comes as rising bond yields have tightened liquidity and increased margin requirements for these crucial financial institutions. This development highlights the liquidity pressures within India's financial system and the direct impact of interest rate movements on major players if approved. It could free up significant cash for insurers, potentially enhancing their investment capabilities and reducing hedging costs. However, it also introduces a new dynamic for banks, potentially altering their risk exposure and collateral management practices. We should monitor how regulators respond and its broader implications for financial stability in a market experiencing significant growth. Let's move to our second story, which highlights India's growing influence on global commodity markets. Global crude oil markets, despite concerns of an oversupply, are finding a crucial lifeline from strong buying by India and China. This demand surge is largely spurred by the ripple effects of U.S. sanctions on Russian energy, redirecting global oil flows. This trend underscores the shifting power dynamics in the global energy sector, with emerging economies like India and China playing an increasingly pivotal role in stabilizing commodity prices. Continued robust demand from these two nations could help underpin oil prices, counteracting bearish sentiment stemming from potential oversupply. Investors should closely watch geopolitical developments and economic growth indicators in these major importing nations, as they will significantly influence energy market trajectories. Finally, we turn our attention back to India's domestic capital markets. India's primary market is experiencing a significant boom in initial public offerings, with companies raising substantial capital. However, this fundraising frenzy has not consistently translated into big rewards for investors, who are often seeing uneven returns. This disparity between the volume of IPOs and investor profitability raises important questions about valuations and market efficiency. It suggests that while the market is vibrant, investors need to exercise caution and conduct thorough due diligence beyond the headlines. We may see a shift towards more selective investment in IPOs and potentially increased scrutiny from regulators regarding pricing and disclosure practices. For investors, this reinforces the timeless principle of fundamental analysis over speculative hype. In summary, India's financial landscape is navigating complex challenges, from liquidity management for insurers to its growing global economic influence and the nuanced returns in its domestic capital markets. Investors should remain vigilant, focusing on underlying fundamentals and macro trends, especially as India continues its trajectory as a major global economic force. Drop your thoughts in the comments, and if you enjoyed the video, give it a thumbs up. Don't forget to subscribe and hit the bell icon. Thanks for watching. See you next time. This is not financial advice.